Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, coming to you from the trading floor a little before 9 a.m. on this Monday, January the 12th. And as we look at the commodity markets, I see increasing input from the outside world in what's happening outside markets, I should say, but outside world as well. We're going to cover a couple of those points for you this morning. First of all, I want to talk about the news that broke over the weekend, where Federal Reserve Chair Jerome Powell accused President Trump of of venting his anger against the Federal Reserve and against him personally for not lowering interest rates faster by weaponizing the Department of Justice to bring threats of indictment, criminal indictment against him. Apparently, the Department of Justice issued some subpoenas and threatened some criminal indictments recently, and it's over Fed Chair Powell's testimony before a Senate committee regarding the renovation of the first of two Fed buildings that are in Washington, D.C. These buildings were built in the 1930s. Reportedly, this is the first renovations on them. Since that time, and the cost overruns have been quite significant. President Trump told an NBC News interview that he had no knowledge of the investigation. So, we probably won't know the truth here, but I'd say there's two different possibilities here at play, neither of which are good for President Trump. The first of the possibilities is that the Department of Justice is doing its job and that they are following evidence of actual wrongdoing, and that President Trump doesn't know anything about it. But because of President Trump's previous comments and actions, that makes him look responsible for this DOJ action. And that's not a winner for independent voters that President Trump needs in order to hang on to Congress in the midterm elections later this year. The other possibility is that President Trump is actually weaponizing the DOJ in this case to go after Fed Chair Powell. And that too is a loser with the independent voter. So that doesn't fare well for President Trump going forward. The markets won't tolerate that. And that risks a weakening of President Trump's ability to be able to carry out his agenda going forward, and the markets will certainly respond to that if they sense that that is a risk factor as well. We did also see President Trump call on credit card companies on Friday to lower their interest rates to no more than 10% effective January 20th. He didn't say how he planned on making those uh, card companies comply, but that certainly was a factor in the outside markets today to start the week. The problem for Trump is that there isn't any real obvious executive authority to implement the policy, and it probably would take action from Congress to do so. And the previous attempts over the years have failed to get Congress to act on such measures. When you look at credit cards, they are kind of the borrowing of last resort, so to speak. They have high interest rates because it's not secure debt. And there's a high level of default, relatively speaking, on an annual basis that these banks have to write off. And so they charge higher interest rates for that. And also, if I could give the scenario of we put taxes on tobacco in America in order to discourage its use. Well, high interest rates are also meant that way kind of on credit cards as well to discourage people from accumulating debt. I know the arguments that they could pay their debt better if they didn't have the high interest rates on them. But at the same time, when you lower interest rates, you convince me that people will spend less money. And that they will actually pay those credit cards off. A few may, but most will simply take advantage of that to spend even more. Now, that gives Trump a bump in the economy, perhaps, with increased consumer spending. This proposal that he has is for 1 year, which would take us past the midterm elections, stimulate the economy, but at a much greater price longer term, in my view. Now, one other thing that I wanted to talk about this morning, and that's what's happened geopolitically, which I think has some long term implications. And I want to start with talking about, for those of you who may be old enough to remember, President Ronald Reagan, elected in 1980, began serving in 1981, gave his famous speech from Berlin in June the 12th of 1987, where he said, "Mr. Gorbachev, tear down this wall." And that wall came down the following year or so. I guess it was actually November 9 of 1989. A little over 2 years later, it came down, symbolizing kind of the collapse of the Soviet Union. When Ronald Reagan came into office, the USSR was seen as kind of the main threat in the world, threat to democracy, I should say. And we were in a nuclear arms race with the Soviet Union. And President Reagan proposed increasing our military spending, and his opponents thought we were going to be going into nuclear war with Russia for sure. But he proposed an increase of 35% in the military budget, not all at once, but it incrementally did happen over a period of years. Now, let's go back to the USSR. It had a struggling economy at the time. And what Ronald Reagan saw was that if he could divert enough money, resources away from that economy, he could create an internal collapse of the USSR without ever having to fire a shot at the USSR. And that's exactly what happened, increasing our military budget by 35%, proposing the Strategic Defense Initiative, which people termed Star Wars. He was about 4 decades ahead of his time in doing so, all of that creating fear in Russia. And so they really escalated the spending and military spending that with money they did not have. Also, they were involved in several strategic parts of the world, trying to get into the West, to have strategic locations into the West. And um, and so what President Reagan did was finance overt and covert operations to battle with anti-communist forces in Nicaragua, in Angola, and elsewhere. And that further increased the amount of military spending that Russia had to do, throwing them deeper into debt, eventually resulting in the internal collapse of the USSR. Now move forward about 4 decades later. China is now seen to be the power as a threat to democracy as it ratchets up its military capabilities, creating critical economic dependencies and points of influence in Central and South America, Africa, and much of Asia. Its economy is struggling post pandemic. It built its economy and its military based on its use of vast human resources, read as cheap labor, to produce goods desired in the West. And so they began to buy these goods, really building up the manufacturing sector in China, which brought a flood of outside money into China from the West to invest in these industries. And that helped fund the growth of China's economy as well as the development of its military. Now, enter President Trump's tariffs, which significantly slowed exports to the West, reducing revenues to China's companies, its manufacturing companies. Investment monies from the West correspondingly slowed as well. Foreign direct investment is markedly lower than what it once was. China's property market began to spiral, sending consumer confidence into a similar spiral. Domestic spending could only be supported by dramatic increases in government funded subsidy programs, and those are losing their effectiveness. Fiscal debt grew at exponential rates. China's central government found ways to sustain the economy, but at a steep price and rapidly rising debt once again. Now, President Trump is proposing raising military spending by 50% to $1.5 trillion to escalate development of new defense weapons. Will China match the increased spending to fund countermeasures? We'll find out more about that in early March when they release their military budget at their two sessions meeting. But is this a parallel action to what Ronald Reagan did, trying to defeat, so to speak, China from within by causing the collapse of their economy? I'm not at this point forecasting the collapse of China as a power in the world, but this may be a strategy that President Trump is utilizing. I still see President Xi and President Trump both trying to seek to have face to face interactions as being respectful and calming the international waters, during this coming year. President Trump needs to calm international waters in order to try to focus at home and winning the midterm elections for Congress, hang on to Congress to keep his agenda going. President Xi needs to rebuild his support base inside of China. But both of them are strategically working around the fringes, so to speak. And I have to wonder if this might be part of President Trump's hidden strategy, so to speak, in trying to undermine China's economy in this battle. Now we'll see how President Xi responds. He is a student of history. He knows what Ronald Reagan did, how the Soviet Union responded, and the results that followed. He also understands that Reagan was a popular president who had 8 years to carry out a strategy, while Trump could very easily lose Congress over the coming year, bringing at least a significant end or slowdown to his agenda. Yet, what the things that I laid out do help explain many of the steps that Trump has taken over the past year, all designed to put maximum pressure on China's economy that never really recovered from that post pandemic economic stress that it faced in a time when its its population is in decline and aging, putting even more pressure on the future of its economy. So, with that, I'm going to end my comments today. I look forward to coming back with you later again this week as developments warrant. Be sure to like and subscribe if you want to continue to receive these updates from the trading floor. Thank you.